What's up, everybody? It is K2, and I'm here to teach y'all how to trade. Now, I've already recorded this video, but when I went back to actually look at my recording, I realized that I did not press record. So I wasted 2 hours of my time. It is now 3 in the morning, and I'm tired as hell, but I'm not gonna let that stop me from teaching y'all. So, first things first, I'm going to go ahead and go over a couple of words and terminology that you will need to know as a trader. The first thing is bullish. The first word is bullish. Second word is bearish. Third word would be, let's just say, price action, because that's what we trade. Uptrend, downtrend, uptrends, downtrends, price action, bullish, bearish. What else? That'll be it for right now. We'll just use these for right now. So to start off, we're gonna start off with price action. So what is price action? Price action is, simply put, the way the market moves. Price action is the way the market moves. So whenever I trade, oh my God, I'm tired. Whenever people ask me what I trade, I tell them I trade price action. I trade simply the way the market moves. I trade the direction of the market, the bias of the market. It's that simple. That's what I trade. It's like saying, okay, I want to buy while the markets are buying, right? If the markets are buying, if the markets are going up, you go up with the markets. Never fight the markets. The market will tell you what it wants to do. All you need to do is follow it. That's how you make money trading. My way, right? So price action is the way the market moves. Next, which ties into price action, bullish and bearish. So you could say bull, bear, bullish, bearish, it's the same thing. Bullish describes the current, well, let me correct myself. Bullish and bearish, they both describe, oh my God. Bullish and bearish both describe the way, I'm trying to find a cool way to do it so I can tie these in. So bullish and bearish, they both describe the God, I can't tie it. The current state of the market. So bullish and bearish, bull or bear, would both describe the current state of the market, right? They both describe the current state of the market. Bullish being the market is in an uptrend. Bullish describes when the market is in an uptrend, when there are a lot of buyers in the market, when there's a lot of up going on. Bearish is the exact opposite. Bearish describes when the market is in a downtrend. Bearish describes when the market is in a downtrend. I will give examples of both of these in a second. If you need to take a screenshot of this, go ahead and take a screenshot. All right. Uptrends and downtrends also describe ways that the market moves, but they go more in depth than just saying bullish or bearish. An uptrend is when price is trending upwards. A downtrend is the exact opposite. When price trends downwards. An uptrend is when the price is trending upwards. A downtrend is when the price is trending downwards. Pretty simple, right? I know. It's genuinely that simple. So an uptrend is when price is trending upwards. A downtrend is when it's trending downwards. Now, I will give examples of all of these except for price action, because price action just describes the markets, how the markets move. Like, it's just saying, okay, I trade price action, I trade the way the markets move. So let me draw out a little mock chart. Boom. Now this is a little mock chart, right? What, before I even say anything, what do you think this is? Do you think this is a bullish market or a bearish market, for one? And two, can you identify the uptrends and the downtrends? You can pause it and think about it. I'm going to keep going. Let's see if you were right. So this right here, this is a bullish market. The market overall is in an uptrend. If you were trying to identify the uptrends, here they are. Where's the circle? Geometric shape, circle. This is an uptrend. This is a downtrend. This is an uptrend. So I'm gonna mark the uptrends with green circles. Where's the light green circle? Uptrends are green circles. Downtrends are red circles. Right? So uptrends are the green circles. The downtrends are the red circles. Can I make this opaque? Yeah, I mean, not opaque, but visible. All right. So the uptrends are circled in green. The downtrends are circled in red. But overall, if you can tell, it is overall a bullish market. Damn, I keep fucking up with that. Now, you might be like, okay, so if it has a downtrend, how can it be a overall bullish market? Because bullish is buy, bearish is sell. Uptrend is up, downtrend is down. We have a downtrend, but overall, the market is moving upwards. Now, how do you identify uptrends, downtrends? That's what we're going to focus on right now. I'm going to focus on how you identify uptrends and downtrends. All right, so the first thing you want to do is you want to identify your highs, your lows, your higher highs, your higher lows, your lower highs, and your lower lows. Now, that might sound like a lot, but I am going to make it easy for you to understand. I'm going to segregate them like this. All right, so uptrends will always carry higher highs and higher lows. An uptrend will always carry a higher highs and higher lows, and it won't let me. Okay, uptrends will always have higher highs and higher lows. Downtrends will always have lower highs and lower lows. So an uptrend will always have higher highs and higher lows. Downtrends will always have lower highs and lower lows. Now, what are higher highs and higher lows, you might ask? First off, we want to find our first low or our first high of the trend. This is the trend. Let's find our first low. Our first low would be right here. All right. Now, when you start off marking, your first low does not have to be a higher low or a higher high. Just mark your first high and mark your first low. The top of a little of a swing. These are swings, by the way. Swing highs and swing lows are the high, low, swing high, swing low, swing high, swing low. All right. Those are your swings. So it's okay to just mark one and start just like this. Boom. That's a high. I'm identifying this high right here. Boom. This is a low. I'm identifying this low right here. Now we move from here to find out the trend. If I mark this next high right here, which is the next thing in the series, after I got the high, I got the low. What's after this low? You come up, it's another high. What kind of high is this? Is this a lower high or is this a higher high? Is this high lower than the previous high, or is this high higher than the previous high? It is higher. This is a higher high. Okay. Now, this doesn't immediately mean that, okay, this is an uptrend. Just because you have one higher high does not make it an uptrend. It's just another higher high. You need a higher low coupled with a higher high to signal an uptrend. Right? So we're going to look. After this higher high, what do we have? We have another low. Is this low higher than this low, or is this low lower than this low? It is higher. So this would make this a higher low. Boom. So now we have our high, we have our low, we have our higher high, and we have our higher low. Now, this next step is what will determine what the trend is. You look, okay, the next high, is it higher or is it lower than the previous high? If it's higher, then yes, you are in an uptrend. We are in an uptrend because we have another higher high. Boom. So this whole zone right here is an uptrend. Now, you might be like, okay, but the next low is lower than the previous low. And that might confuse you at first, but I'm gonna go ahead and let you know it's nothing to be confused about. Because all you do is mark this next low. Boom. What is this low? It's a lower low. It's a lower low. Now, this lower low does not invalidate the uptrend. It just holds it up a bit, okay? Now, if after this lower low, if it is a higher high after this lower low, then we have an issue, because then prices, you know what I'm saying? Prices getting a little confusing, and it might be entering a consolidation period, or it might make another higher low than both of these, but we're not there yet. This next high was lower than this higher high. Does this immediately make it a downtrend? No, it does not make it a downtrend immediately. It just doesn't, right? Because if I block out all of this right here, say I drag right here, and you're looking at it like this, Yeah, and you're looking at it like this is still an uptrend, right? Now, as time goes on, which this is what the markets will look like. You know what I'm saying? As time goes on, the markets will build. Okay, boom. We made another low. So let's mark that next low. Boom. Now we have another lower low. You need a lower high and a lower low coupled together to make validation that it is a downtrend. Same thing with higher highs and higher lows. And then if you want to, you can screenshot this and mark it up yourself and see if you can figure out if this is an uptrend right here or if this is a downtrend. I'll let you screenshot and do it yourself. I'm not really gonna do that right now because I have something else that I want to teach you. Now, you might be like, okay, well, what if the markets isn't making higher highs and higher lows? What if the markets are like this? And I'm going to go ahead and let you know the markets will do this. When the markets are doing this and you mark your highs and your lows and you realize, okay, it's moving a little weird. Like we have higher highs, lower lows, lower highs, higher lows. Like, what in the world is this? This, I promise you will not have to worry about because this whole zone right here is consolidation. That was another term that I forgot to write out. Consolidation. Consolidation, when it comes to trading, basically just means price is staying in the same area. It's not going anywhere. It's not volatile. It might be volatile, but buyers and sellers are about equal at this level. And price hasn't decided if it wants to break out to the bottom and cause a downtrend or break out to the top and cause an uptrend. Price doesn't know yet. The buyers and sellers are still in the market. There's usually an equal amount of buyers and sellers pushing price up and pushing price down every time one of the candles comes to a specific level. In this case, it would be this level right here. At that level, sellers are pushing price down. At that level, as you can see, because let me grab my arrow. At this level, every time that price comes to this level right here, what does it do? It sells off. When price comes to this level, it buys up. When it's in the middle, it's doing both. When it comes near this level, buys up. When it comes to this level, sells down. Right? These kind of areas, if you see them when you are trading, you are never supposed to enter a trade like this. You are never supposed to enter a trade while price is consolidating. That is a big no-no because you will not know if price is going to go up or if price is going to go down. And I just wanted to add that also when price is down here, buyers are pushing price up. Try to drag it where you can see it. Right there. So I'm going to let you look at that for a second. I'm going to delete it. Now, I've taught you the pure basics. That is the simple basics to trading. You will need to know a couple of other things, and I will go over those. For example, candles. You've probably seen these before. But if you haven't, it's cool because I'm still going to explain what they are and what they mean. And I'm going to show you examples of them in the real market. Okay. Make this one green. Make this one red. All right. Oh yeah, let me also reset it because I don't need my shit being that color. All right. So these two are both candles or candlesticks. Now, they are very important. What they mean is also very important. I don't necessarily trade candle theory, which means I don't trade based off of singular candle movements. I trade based off of overall price reaction to key levels. So, but it's still very important to know what these candlesticks mean and what they do, right? So, first off, this candle right here is a bullish candle. I told you you were gonna need to know that keyword, bullish. Now, if you remember what bullish means, then you know what kind of candle that is. This right here is a bearish candle. I'm gonna give you a few seconds to think about what these candles mean, because I told you what bullish and bearish both mean. I'm gonna give you a second to think about it, and then I'm gonna type it out. All right, a bullish candle is a candle that represents buying pressure. A bullish candle is a candle that represents buying pressure, aka the same thing as a bullish market. A bullish market is when price is trending up. It's when it's buying up. A bullish candle is a candle that is moving up. Here, I'll write this down too. A moving up candle. That'll make it easier for you to remember. It is a bullish candle is a moving up candle. Think of it like a bull's horns. Which direction do they face? They stick up. A bull's horns stick up. Bullish candles move up. A bearish candle, if you remember what bearish means, a bearish candle is a candle that represents selling pressure. A bearish candle is a candle that represents selling pressure, or damn, I can't spell, or a moving down candle. Every time you see a red candle or a green candle, now you know what they mean. A bearish candle, let me go through this again with you, is a moving down candle. A bullish candle is a moving up candle. Think of bearish candles like when a bear is walking around on all fours, which way is his head facing? The ground. He's looking down. Same thing with this candle. This candle represents a move down. Now you might be like, okay, they're the same size. How does one move up and the other one moves down? I'm finna show you. So, with a bullish candle, if price is moving up, it opens that lets you know that it opens from the bottom and it closes from the top. So, a bullish candle will open from the bottom of the box, and when it closes, it will be at the top of the box. The close will always be at the top of a bullish candle. The open will always be at the bottom of a bullish candle. Now with a bearish candle, it's the exact opposite. A bearish candle will open up at the top and it will close at the bottom. Damn, where's the thing? And it will close at the bottom. Boom. Now, I'm going to show you what that looks like live because the markets are open today. Now, you might be like, okay, I see the boxes, but what are those lines at the top and the bottom? What does that mean? I'm finna tell you exactly what they mean, what they're called, and what they represent. All four of these, they mean the exact same thing on both candles. They are called wicks. They're called wicks. Now, what do wicks mean? A wick represents the highest and lowest that price got during the candle. Now, let me also reiterate. I'm not sure if I said it already. If I didn't, then I'm a bad teacher. But one candle represents, I did say it. I said it in my other video that I forgot to record. Okay. Let me also say this. One candle represents a specific time, right? So if you look at my mouse and you look at where I'm at up here, you see I'm highlighting the 5. I'm on the 5-minute chart. On the 5-minute chart, each candle represents 5 minutes. If I go to the 15-minute chart, each candle will represent 15 minutes. So since we already have the 5-minute chart highlighted, let's just say these candles represent 5 minutes. So in these 5 minutes, let's look at my arrow. In these 5 minutes, price opened up right here. It's the absolute highest up here. So during this time, the candles, they move. You're going to see. But it went its highest right here. And then it went its lowest right here. And then it came back up and it closed right here. And that finished the candle. Now for this red candle, price opened up right here. It went all the way down here to that wick. It came all the way back up here to this wick, but it ultimately came all the way back down and closed right here. And that is what formed that 5-minute candle. Now, that is candlesticks for you. That is candlesticks. I gotta take my time deleting all this. All right. Now, I believe that it is time to show you everything that I just told you on a real chart. Here is a real chart. Matter of fact, let me go to where price is at right now. Here is a real chart. This is an actual 5-minute chart. These are real candles. Now, your candles will not look like my candles. I customized my candles to be different colors. I understand what these different colors mean, right? So for me, an orange candle represents an orange candle is the same thing as a green candle, and a gray candle is the same thing as a red candle, right? That's just how I customize my trading view. I would not recommend you doing this unless you fully understand what colors your candles mean. But here we go. This is a 5 minute candle. If you get Trading View, which you should have gotten because I linked everything that you need. It's all free. You need Trading View, you need a broker, and I linked a broker for you to get, and you need a laptop. That's it. If you already have a laptop, everything else is free. If you don't have a laptop, you can get a $150 laptop. It's $150 laptop to invest into yourself. Okay. If you don't, if you can't get a laptop right now, get a job and save up for one, or do something else. You know what I'm saying? And save up for one. It's up to you. But as you can see, I'm gonna zoom all the way into this candle. This is a real live candle in a real live market. All right, we're gonna zoom into this candle, and we're just gonna look at it. It's not very volatile right now, so it's not gonna move a lot because it's 3:43 in the morning. But you see the candle is moving. It's a green, technically it's a green candle. The lowest it got was down here, the highest it got was up here. After this candle closes, I'm gonna, actually right now I'll go to the 1 minute so you guys could see an actual candle form and know what it is. So let's watch this candle. Okay, boom. A candle opened. A new candle opened. That previous candle closed. Let's see what it does. Okay, it's moving up. Now it's moving down. That's, keep in mind, if it is a bullish candle, then it may turn gray, but it's not. That doesn't mean it's going to close gray. Okay, see, it's going low. See how fast it shot back up? It's just moving. If you look to the side, there's a timer. It'll let it, it's gonna count down from 1 minute because each candle represents 1 minute. So 3, 2, 1. Now this candle has closed and the next candle is gonna form. All right. Now you just watch this whole candle form, right? You know now that this shit, the lowest it went, bro. I need to move this. I need to move that damn cursor line, bro. Scales and lines. It's making it hard for me to see what I'm trying to push. I don't know. I don't know. I don't know. But this, you see this orange line right here. When I move my mouse, you'll be able to see it. You see that orange line? It went all the way down here. That was the lowest that it went. The highest that it went was up here, and then it ended up closing right there. That is a candle. That is a candle closure for you, right? Okay. Now, let's also look at a real trade, not a real trade, but a real chart. And now that right there, my friends, was a paper trade. Do not get fooled by people who post paper trades and try to make it look like real trades. They are not real trades. Okay? Do not fall for that shit at all. Please. Because them the type of people that will make you pay for a course and not teach you shit. Okay. Here's a good example of an uptrend. If you just see price just moving randomly and it's not moving in a trend, like if the market looks like this to you, don't trade that. Do not trade that. If the market looks like this to you, yes, you can trade that. Okay. Damn, I should have took this trade for real. I was just trying to show somebody what people do whenever they paper trade. I fuck around. I just fuck around and smack, bro. It's crazy. But yeah, so if you remember how to identify uptrends and downtrends, then you should easily be able to follow along. We have a low right here. That's a low. Fuck. We have a high right here. Then we have a low right here. A high right here. We have another low right here. Another high right here. A high right there. A low right here. And a high up here. Now, I've already taught you guys how to mark up charts, what everything means. So this should be pretty easy to follow along with now. Now that I am marking these charts up. What the fuck is it doing, bro? Boom. So first things first that we want to do, mark our lows and our highs. Boom. This right here is our first low. Then we have a high. All right. So what's next? Our next low. What kind of low is that? Is that a higher low or a lower low? It is a higher low. Boom. Then next we have another high. What kind of high is this? It's a higher high. Boom. Now we have another low. Kind of low. It's a higher low. Boom. Shit. Yeah. Yep. All right. Now I'm gonna clone these because yeah, that's all we got, bro. Boom. There you have it. You have lows, highs, higher lows, higher highs, higher low, higher high, higher low, higher high, higher low, higher high. Boom. Now you see it is that easy to mark charts, to find trends. Now we know that the market here is in an uptrend. If we look on the 1 hour, damn. Let me not indulge in this right now, even though I'm very intrigued. I'm not gonna indulge in it. But yeah, damn, I want to trade this. Yeah, the market fuck, I can't talk. The market is in an uptrend, a very strong uptrend at that. It's been in an uptrend for a while, since February. It's been in a strong uptrend. This right here is a perfect example of a bullish market. Very bullish. Looks like it might be rejecting off of this next high though soon, because it did make a lower low. Whatever. But as you can see, when you take longs while price is in an uptrend, you tend to win them. Why? Because if you trade up while price is already moving up, you will win your trade. You will win your trade. See what I'm saying? I'm gonna teach you guys how to place trades, when to place trades, when to get your entries and all of that. But I'm gonna put that in another video because I don't want this video to be too long. It's already gonna be a little long. Just don't want it to be too long. Okay. And I also want to show you guys what happens when you trade against the trend. As you can see, gold is in a downtrend. It is a bearish market right now. Very bearish market right now. A few days ago, I placed a trade where I bought. I thought that price was gonna go up. Why did I think that? I do not know. It was a bad decision on my part. It was a bad trade in general. Don't know why I took it, but I did. And I learned from my mistake. Oh my God, bro. Sometimes I hate TradingView, but it's the best charting system out here. All right, right here. Now, in my eyes, looking at it from this point of view, it looked like it was gonna buy up. Like, looking at it from this point of view, it was looking to me like, okay, price is in an uptrend right now. So I got in the trade after it made a higher low, and I lost that trade. I lost money, yeah. You know what I'm saying? When you trade, you are going to lose money. If you think you're not going to lose money as a trader, you need to think again. For real. You're going to lose money. You're going to lose trades. Nobody's a perfect trader. Now, I lost this trade because I tried to buy up. While, yes, it was an uptrend, but overall, it being an uptrend didn't matter because price was in overall on the higher time frame, price was bearish. There was a bearish market. There's always going to be times when price goes up in a bearish market, like here, for example. Here, we know just from looking at what we were looking at that price was going down, but right here it's coming up. Right? It's coming up. That's just how price moves. Price will go up. It can be going down. It can be shooting down like a rocket. While it's shooting down, it's gonna still come up a little bit. You know what I'm saying? And I just did it at a bad time. You know what I'm saying? I tried to buy at a bad time. I tried to buy while price was not in a bullish market. Right? So when price is in a bullish market, the only kind of trades you want to take are buys. When price is in when price is in a bearish market, the only kind of trades you want to take are sells. Now, after that one loss that I took, I came and I got in a short. All right. Here's some more terminology for you. Longs and shorts. A long position is when you buy. Well, I can't say buy a trade. It's when you get into a trade by buying. A short is when you get into a trade by selling. Now that does confuse a lot of people who are first coming into trading because a lot of people think that you can only buy they only think that you can buy whenever you're trading. And they only think that when price goes up is when you make money. I can assure you that is not the case. A long is when you buy and you make money. So if I get into a long and price goes up, I will make money. If I get into a long and price goes down, I will lose money. If I get into a short and price goes up, then I lose money. If I get into a short and price goes down, then I make money. Hence why this right here was a short. The red represents loss of money. The green represents gain of money. This is a position indicator. As you can see, I entered the trade and I won this trade because I got in the shorts in a bearish market, which is always good. Here it is again. Another short in a bearish market. I sold in a selling market, so I made money. Right here again, I sold in a selling market and I made more money. That's just how this works. That's how trading works. When you go with the market, you will make money. Simple as that. Now, I'm gonna end this video here. I will be making a lot more videos teaching more in depth, but for right now, I want everybody who's watching this video to focus on those fundamentals that I just taught. Once you master those fundamentals, by the time you master those fundamentals, I'll be dropping another video next week on Saturday. So by the time you feel like you got in the groove of marking charts up and understanding charts and getting a good feel for TradingView, I want you guys to learn how to use TradingView. This right here. It's not difficult at all. I've taught you how to look at the markets. It's not difficult. If you want to pull up a market, all you have to do is just go up here to a new tab. Either press create new layout or just search a pair. Like say I want to trade. Damn, put UDS. Oh no, I forgot you can't search right here. It's weird, but just do create new layout, create a layout, and then one will pop up right here. You just type up in this top box. What? Oh yeah, XAU USD isn't Forex. But yeah, you just type up in this box, whatever. I'm gonna let you know now. I trade Forex and indices. I also trade metals, but I can't remember what metals comes up. I think metals comes up in economy. No, it doesn't. I trade Forex, indices, and metals. I don't know what it comes up under though. Commodity. Okay. Yeah, commodity. So it'll come up as a commodity. This is gold. You can also trade silver, which is XAGUSD. You can trade oil. Ooh. Let me see. Oil. Crude oil, yeah. You can trade oil, crude oil, USD. You can trade just about anything you can think of. You can trade stocks. If you want to trade stocks, you can trade stocks with this same strategy. I don't trade stocks, though. Stocks just isn't for me. But yeah, I want you to get familiar with TradingView. I want you to master everything that I've taught you. Go through it 100 times if you need to. I just want you to fully understand these fundamentals by the time you watch my next video. Because the next video, I'm not going to be hitting the brakes like I was this video. I'm going to be going, you know what I'm saying, all the way. Like, I'm going to be going quick. Well, I'm not going to be going too quick, but I'm going to be going to where you can understand me. But I also don't want to go too slow for the people who already understand the fundamentals of trading. I don't want to go too slow and then they end up not watching the video. This is for beginners, but this video, it's okay for you to rewatch it 30 times. When I first started trading, all the trading videos that I watched over 10 times each. Every trading video. And I've watched a lot of trading videos that are hours long. It's okay to rewatch it. It's okay to take your time learning it, right? There is no rush. The markets will always be here. There will always be a way to make money in the markets. Nobody is rushing you. These videos aren't going anywhere. They're staying here and all of that, right? Another thing, if you think trading is going to make you rich overnight, you are sadly mistaken, and you might want to rethink trading because it's not going to make you rich overnight. It can. It's very possible that it can, but it's not likely at all. And it's not smart to try to go into trading thinking that at all, because you will end up losing all your money. I've always said this. I made this up too. So if anybody else starts saying this, just know I said it first and I came up with it. But coming into trading, you are not supposed to coming into trading, you're supposed to come into trading wanting to be the best trader that you can be, and not come into trading wanting to make money or solely trying to make money. If you come into trading just solely trying to make money or solely thinking about the money aspect of it, you're going to lose all your money, because you're going to make emotional decisions based off of the monetary numbers instead of the fundamentals and the right way and your strategy and all of that. When it comes to trading, all of the good stuff is going to go out the door and you're just going to start making bad decisions in the market. You don't need to do that. Okay, you need to go into trading trying to be the best trader you can be. Now you might be like, man, I didn't join this Discord, I didn't watch this whole video just to try to be a good trader, man. I'm trying to make money. And trust me, I understand. But think of it like this. If you are the best trader that you could be, what do you think comes with that? The money. The money comes with that. The money's going to come with being a good trader, because you're going to be focused on doing the right things to be good at trading versus focus on just the money aspect of it. Because if you're focused on just the money aspect of it, then you will make bad decisions. You might try to fully leverage, full margin, full port your whole account in one trade, and you'll see how much money you can make off of that, and you will throw all your money in the trash, basically. I'm going to show you what I mean. If it'll load. Okay, so this is gold. I'm going to show you guys my wins in a second for this week. I just want to go over this shit first. It's acting slow. Oh, come on. I got a shitty computer. I need to get a better one. All right. Now, this is what it looks like right before you get into a trade. It is moving a little slow, but it is what it is. All right. So this is what it looks like right before you get into a trade. It'll tell you your projected loss. It'll tell you your projected profit. Right? That shit moving crazy, ain't it? Oh, I guess not. No. Yeah, it'll tell you your projected loss and your projected profit. I definitely need to get a better computer. But say I do 42.50, and then I do 3,500. Right? Well, no, that's unrealistic. Price won't be at 3,500 for a while. Can I just do 4,000? Okay, for example, this right here. So you'll see this. You'll be like, you might only have $300 in your account, and you'll try to take a trade like this. This isn't realistic. Where is 4,000 at? No way, right? 4,000. Right here. Yeah, 4,000 is all the way down here. So you be taking a trade that looks like this. Hold on. 42.50. Where is that? And then 4,000. So you be taking a trade that looks like this. Right? This shit would almost instantly stop you out you have a very unlikely chance of winning this shit, and you would almost instantly lose $4,000. I mean, not $4,000, $300. Now, this is about a reasonable stop loss. I've done short stop losses before, but those were risky trades, and I basically know what I'm doing. Okay, this is about an average size trade right here with a good stop loss. It'd be like right there. So I'll do 4,300. I ain't even gonna do the O2. I'll do 4,300. Come on, dog. As you can see, I don't have anything in my trading account right now because I have withdrawn my money. Finna deposit some this week and get back to trading. Bro, this shit's finna piss me off. I need a better computer like yesterday, bro. Damn. Whatever. It's moving so slow. And okay, now you want to work. Okay, 4,300, perfect. So you be losing $1,000 to gain around $4,000, which doesn't sound bad, but how much? Like, what does your account look like? Right? A lot of people aren't coming into this Discord or aren't coming into trading with just $1,000 to throw away, right? Because if you lose that trade, you will lose $1,000. You will lose $1,000. If you win this trade, you will win $4,000. But price has to go all the way down here. It has to. If it doesn't, then you're fried. You just lost $1,000 right? You don't want to do that because that shit will suck. You know what I'm saying? You don't want to do that, right? You need to be risking a good amount of your a good risk to reward with your account, which I'm explaining this and I don't know why, because I said I was gonna end the video. It's just gonna make the video way longer. But yeah. So I hope you guys learned a lot. I hope I did a good job teaching you guys for the first video. But yeah, I will be back next. I'll drop another video next Saturday, and I will be going live next Sunday. If those dates change or they flip-flop, like if I go live Saturday and drop a video Sunday, then we'll see. But I will see you guys next time. If you have any questions, just at me in the trader chat, and if I'm around my phone, I'll answer. But all right, I wish you guys luck, and I hope you took notes, and good luck.